the market sentiment is negative, but you've now got an extraordinary risk reward opportunity. Now is a much better time to invest. You know all the things that you wanted to happen have happened. If you're an investor, it really comes down to what your time horizon is and how much volatility can you stomach. Everybody's got different risk tolerance. They've all got different pools of capital. You know, over the last year, there's been 100 companies that have added Bitcoin to their balance sheet. The derivatives market and IBIT has surged. The flows into the ETFs have surged. All the major banks have announced support. I think that there'll be some skeptics. They don't really appreciate what Bitcoin is doing. They don't understand digital capital. They don't understand digital credit. You're getting the benefit of the crypto economy, but you're not on the volatility roller coaster. So
we've seen this pullback here over the past few weeks. I look at strategy stock down about 27% over the past month. Are investors losing faith in the Bitcoin movement?
In this discussion, Bitcoin bull Michael Saylor breaks down the current state of the crypto market, why he believes Bitcoin is being manipulated, and how he plans to navigate an upcoming crash. He points out that massive Wall Street firms and institutional investors holding billions are making strategic moves driven by fear and uncertainty. Saylor warns that the intentions behind these large buyers may not be what everyday investors assume. With major players like BlackRock increasing their crypto exposure, their influence has triggered a wave of FOMO across Wall Street. Meanwhile, Bitcoin has dropped nearly 13% over the past month, adding to market tension. As the government shutdown ends, investors are watching closely for Trump's next economic steps, which could fuel rapid market shift. In his latest interview, Saylor shares his outlook on what comes next for Bitcoin and the broader crypto market.
Hey, I am Maria with DailyDoseCrypto. Have you noticed that gold, silver, and Bitcoin have hit all-time highs recently? Is this a coincidence, or are smart investors onto something? The dollar is depreciating, inflation is eating up all of our cash, and the US national debt is through the roof, hitting new highs every day. That's why people are shifting to alternative assets like gold, silver, and Bitcoin. We at DailyDoseCrypto have partnered with ITrust Capital, your one-stop platform to buy and securely store 80+ digital assets, including Bitcoin, gold, and silver to hedge your future against debasement. With over 200,000 accounts, 15 billion in transactions, and 11,000 plus positive reviews, they're helping real investors build long-term wealth with their tax advantage, IRA, and PCA, which is a premium custody account that supports the highest level of custody and security in the space. They do this all with institutional-grade custody through partners like Fidelity Digital, Fireblocks, and Coinbase Prime, keeping your assets secure while you can trade 24/7. Fees are just 1% per transactions with no monthly or annual costs. Getting started is simple. Sign up for free and fund an IRA or PCA today. You'll receive a $100 bonus and start growing your assets the smart way. Click the link below to open your account now and begin your journey toward generational wealth.
if you don't want to trust anybody, you want no counterparty risk, you buy Bitcoin. Bitcoin's up 50% a year over 5 years. No counterparty risk. It's very straightforward. If you want to have your cake and eat it too, you could buy some convertible preferred like STRK. And if your time horizon is less than 4 years and you don't have much volatility to stomach, you shouldn't buy the equity or the equity hybrids. You should buy the credit, something like STRC. Everybody's got different risk tolerance. They've all got different pools of capital. The good news this year is now you've got a variety of different instruments you can use to ride the digital wave. All the major banks have announced support. The accounting has dramatically improved. The tax regime has improved. The administration support at the SEC, the CFTC, the Treasury level has improved. And so, and the technology has improved, All the fundamentals are good. If you're going to be an equity investor, you have to think for yourself, and you have to have a time horizon of 4 years or longer. And equity markets are either going to lead or lag, and occasionally they'll perfectly reflect reality, but generally it's only a few days a year when they'll be perfectly rational. So if you don't have that 4-year time horizon, and if you don't want to make decisions based on fundamentals, if you simply want to park your money in a stable instrument and pick up a stable yield, you should be a credit investor. You shouldn't be an equity investor. I think the irony is the fundamentals of the industry are so much better today than they were 12 months ago, that you've now got an extraordinary risk reward opportunity. Now is a much better time to invest. But at the end of the day, the big dynamic in the industry is digital capital has gone from nothing to $2.5 trillion over 15 years. Digital credit didn't exist 12 months ago. We've issued nearly $8 billion of digital credit. Digital credit is got a tax equivalent yield of 4 times higher than bank credit. You know, you can have a bank account, in New York City that pays you 4% and it's taxable, or you could buy something like STRC that pays you 10.5% that's tax deferred. So the market's evolving, and the short sellers aren't really interested in the impact of AI or the impact on digital assets to change the way the world works. They're just interested in being skeptical as a business. I don't really focus on them. Nothing great has ever been created by a short seller. I think the money market industry is massive. There's $30 trillion worth of assets invested in treasury-type instruments in the United States. Stretches about 1% of 1% of that industry. It's about a $3 billion issuance. And the big idea here is you take an asset appreciating 50% a year with a volatility in the mid-40s, and you strip the volatility from 45 down to below 5, maybe to 2, 3, or 4, or even 1, and then you extract about 10% dividend yield. And if you do that, you end up with something which is yielding 6% more than the risk-free rate. And when the vol gets to 1, you've got a Sharpe ratio of 6. So we're really engaging in financial engineering to distill pure currency yield above the risk-free rate. And of course, the common stock shareholders in MSTR get the difference between the 10% that we pay and the 50% that Bitcoin's been performing. Long term, the math is pretty simple. We expect Bitcoin to appreciate about 30% a year for the next 20 years. We expect to pay about 10% dividend yield on the preferreds. 2/3 of the benefit go to the common equity shareholders, and most of the volatility is stomached by the common equity shareholders and the corporation. And the credit investors get this pure 10% return of capital dividend. That means it's tax deferred. They don't have to pay tax on it until they sell the underlying instrument. And that means that they're able to invest in a credit instrument that pays them a 10% dividend instead of holding a money market that pays them 4% in a taxable coupon.
Because look, at the end of the day, record-setting shutdown, I mean, how can you have trust in the dollar?
You know, we joke there's no tariffs on Bitcoin. Bitcoin has no employees. It's got no corporate headquarters. It is an index reflecting the digital economy or the global digital economy. So if you just like to buy 1/21 millionth of the global free market, then you buy 1 Bitcoin.
Michael Saylor warns that Bitcoin's recent drop is tied to manipulation from major Wall Street firms and billion-dollar institutions making strategic moves driven by fear and uncertainty. With BlackRock and other giants increasing their crypto positions, Saylor says their influence is creating major market tension and unexpected volatility. He notes Bitcoin is down nearly 13% this month, and investors are watching how Trump's next economic actions could shift momentum. In his latest interview, Saylor explains what he expects next for Bitcoin and how he plans to navigate the potential crypto turbulence ahead.
As they lose confidence in a government, if they think that their favorite company might make a mistake, all of these things are risk factors, and they're all risk factors that Bitcoin doesn't undergo and doesn't experience. So as people get educated, I think they can see the appeal of buying digital capital instead of investing their money in equity capital or real estate capital or fiat capital or corporate credit capital instruments. And so this is all a teaching moment, but I think that every single month that goes by, more and more people start to appreciate the benefit of owning 1/21 millionth of all the money in the world forever. I think the country is going to do just fine. This is a hiccup. It's not our finest moment, but right now, the exciting things that are going on are digital intelligence, digital assets, digital capital, digital credit. It's pretty clear that money's going to move at the speed of light. It's pretty clear that a billion AIs are going to think a billion times faster than us human beings. You can see a world where a billion robots are going to build everything we need, where the cars are going to drive themselves, where the products are going to figure stuff out for us. So we're moving toward an intelligent world that is millions of times more efficient and more empowering. So in a world where a billion robots do everything I want before I think to ask for the thing, I don't know how I won't be better off.
Michael, is there a risk that some of those robots or perhaps quantum computers combined with generative AI, that they crack Bitcoin, or that they think of something better than Bitcoin and it becomes obsolete?
No, I don't think there is a risk. I think that technology will improve and hardware will improve, and at some point, if the hardware gets more powerful, we'll have to upgrade the software that protects our system. So just like you can expect your bank to upgrade their software, and you can expect to upgrade your Apple software and your Google software and your Microsoft software, and you can expect to upgrade your hardware devices. I'm on the iPhone 17 Pro Max right now. You'll upgrade your computer. Bitcoin is a protocol, but it runs on hardware and software nodes all around the world. The hardware is being upgraded every few months. The software is being upgraded annually. And so the software and hardware that runs the Bitcoin protocol is going to get upgraded just like your Apple and Android and Microsoft software will get upgraded.
I'm curious, as you look back at that crash, what that taught you and whether you see any parallels today. Obviously, you're aware of the big bubble debate going on right now.
I think it teaches you to focus. Don't overextend. You might have 10 good ideas, but you're better to focus upon your one idea and to commercialize the one idea. It also just reminds you that no matter where you are as a corporation, you can always improve the company's outlook, and you can improve and create shareholder value by harnessing the next wave. I think history is replete with examples, whether it's the internet or whether it's AI chips. People wrote off GPUs as being irrelevant, and all of a sudden we have the ChatGPT moment. The Bitcoin miners were struggling, and then AI explodes, and now everybody wants their energy. I think that digital intelligence, digital assets, digital capital are creating the most compelling opportunities for corporations in the world today. I think the important thing is to use them the right way. For example, we used AI in order to design those 5 digital credit instruments. So people ask, how do you make $1 billion with AI? Well, we created $8 billion with AI just by designing new types of securities. Yesterday, STRC traded $175 million. It's the most successful preferred stock in the century, maybe ever in the history of the capital markets. It was designed completely with AI. It's 100 times better than a good preferred stock. I would encourage anybody with any corporation to think about how you turbocharge your company by using digital assets, digital currency, digital capital, or digital intelligence. There isn't a company that you can't improve using technology in the year 2025.
As you look at your long-term outlook for Bitcoin, other cryptocurrencies, how concerned are you that this country can't produce the power it needs to meet the demands of cryptocurrency?
I think the company got a wake-up call. Back in 2020 and 2021, I talked to a lot of power companies and energy companies, and they were about to decommission all their nuclear reactors. We were staring at all the nuclear reactors getting decommissioned, and there was a movement to shut down nuclear energy in this country. And of course, in Germany, they shut them all down. From early 70s, 73, all the way till 2023, the nuclear industry was persona non grata, and it was politically incorrect. And I think the explosion of AI, and when people started using these AIs and realized they're actually quite useful and they're transformational, it created a reconsideration and a political shift in the United States. The Overton window shifted.
Michael Saylor emphasizes that Bitcoin stands apart from traditional financial manipulation, offering an alternative in a system dominated by major institutions. He explains that corporations like Apple, Amazon, and Google may rapidly accumulate Bitcoin through spot ETFs, leveraging long-standing financial relationships without needing to buy the asset directly. This shift highlights how crypto is reshaping traditional finance and accelerating institutional adoption. Saylor urges investors to recognize how quickly the economic landscape is evolving and to position themselves early as digital assets gain prominence. He believes Bitcoin's growing influence could redefine wealth preservation and investment strategy in the months ahead, especially as more institutions move into the space. How do you see Bitcoin influencing the broader financial system in the coming months? Share your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.